Hey, recent studies have shown that about 36% of US workers are involved in the gig economy. That means that they have a side hustle, or what some refer to as an independent or alternative employment situation, where they're not working for a company, they're working for themselves. And so, look, if you or someone you know is involved in the gig economy, you're getting income from a side hustle, you need to know how that will impact your chances of getting a mortgage and some of the challenges that you'll face there. So we brought in our Southern Indiana mortgage expert, Brad C. with Kentucky Mortgage Group, to talk to us a little bit about that, give some guidance and advice for gig workers and how they can apply for a mortgage. Brad, thanks for joining us.
Before we started this, I didn't know that number.
It's a large number, and just to expand on that, number has increased because of the pandemic. We can go into a lot of boring economic details, but the study that I saw said up to 29% now have a gig economy job as their primary income, and that number is baffling to me.
Yeah, that was high. It's higher than I would have expected or guessed, honestly.
Yeah. And so let's dive into that. Brad, are you seeing an uptick in self-employed people coming to look for mortgage?
Absolutely. We've seen a lot of tradesmen, roofers, or guys that do gutter or landscaping that are starting their own. And we have seen an uptick in that, yes.
Okay. So again, just a general question, is it still possible for these gig workers to get a mortgage?
It is, but it comes down to timing, because in the mortgage world, when you're self-employed or you don't have like an hourly rate or just a guaranteed salary, we have to average income. When you take somebody like the roofer or the landscaper, and they do, 80 to 90% of their business in the year during the summer months, and not as much during the winter months, we have to take an annualized number divided by 12 to get a true monthly income number for qualification. And so when you make that change, you're basically triggering a 2-year wait period, because we have to average 2 years of that income.
Okay. So the answer, as I'm hearing you say it, is yes, but there are some challenges. I've had some gig workers, some self-employed individuals in the last year or so. And so that's why I wanted to bring it on. It's a growing trend. It's not going away. So I heard you talk about it triggering this 2-year waiting period. What other challenges might a self-employed individual face as they're applying for a mortgage?
Everybody in, mortgages, real estate agents, everybody's kind of in this same boat, and self-employed's the same. Is, if you're going to want to save on your taxes, right? You want to give the government as little as possible. Well, the problem is your qualifying income is basically how much money you pay taxes on. So if you make $100,000, but you put on your taxes that it costs you $99,000 to make that 100, well, then you really only made $1,000. And I'm sure that there's numbers being moved around, and your CPA is probably doing some things to make sure that you limit that tax liability. But by doing that, you could get yourself in a tough situation if you try to buy a house.
Okay. And you're not talking about illegal tax evasion. Oh. You're talking about legal tax strategies. So again, someone says, hey, I really made 100,000. But what I'm showing on my tax return is a take home income of 25,000. That's going to impact whether they can get a mortgage and the amount of payment they can afford.
That's correct.
Okay.
And so on that same note, we've kind of seen a rise in what's called a bank statement loan. So there's some lenders out there doing what's called non-qualified mortgage. So you're removing Fannie Mae, Freddie Mac guidelines from the equation. We're doing what's called bank statement loans. They're challenging. They're not the easiest. We can get them done with 12 months of bank statements. but they're looking to see how much money you're depositing into your account or your business account each month versus what your expenses are coming out versus looking at your tax return.
Okay. So the tax return is kind of that normal FHA conventional loan profile. This is
Correct.
a loan process, approval process that tries to circumvent that and to help these gig workers, these self-employed individuals
We've
more easily qualify.
Exactly. And so we're seeing more lenders advertise or reach out to us about these bank statement loan programs that they're offering because we are seeing a rise in them. And I'd imagine it's because of the 36% gig economy that we have right now. The interest rates on them are significantly higher than a traditional Fannie Mae, Freddie Mac conventional loan. But if you need to get a house, that may be your only option. So one thing that we're kind of doing, or I've got this situation with a couple different clients now, is they're almost at that 2 years. They found a house they love. We're doing the bank statement loan now. We're going to do their 2021 taxes, make sure all those numbers look good, and then we'll refinance them into a conventional loan product once we have those full 2 years tax returns.
Okay. All right. So just one more thought on that tax situation. And for the record, neither you or myself, we're not CPAs. We're not giving tax advice. But generally speaking, are you seeing people who are adjusting their tax strategy for a 2-year period to make it so that they're more easily qualifiable for a mortgage?
Yeah, so I mean, it's a conversation, and like you said, not a CPA, but when a potential client is, hey, I want to buy a house in 2022, this is going to be my second year of tax returns. Okay, well, let's look at it. If we're going to average those numbers, let's look at your 2020 taxes, what you reported as income. What's our number that we need your CPA to get to on your taxes to make sure that you're paying enough taxes to have the qualifying income to get the mortgage payment that you're looking to get?
Yeah. Okay. And that's
a lot of moving parts there, but we do that.
Yeah, absolutely. And here's the thing. Brad C., Kentuckiana Mortgage Group is going to have that conversation. If you're going other places, you're going to a typical bank, they're going to look at what you've got and probably send you packing, whereas you're having that deep dive and saying, hey, here's some things that we can do. So kudos to you all. So you talked about challenges. The income calculation is going to be different. It's going to be spread out as opposed to W-2. You're getting that consistent paycheck. The 2-year waiting period, maybe even some tax challenges there. When someone comes to you with a self-employment, what kinds of things are you looking at in regards to their business to see if they're can qualify or not?
So we've got Excel spreadsheets that we use actually, where we take your taxes and plug your income losses like write-offs and all this stuff in this formula, because Fannie Mae and Freddie Mac do let us add back in some of your expenses. So like depreciation isn't a true expense, but it's reducing your bottom line, right? So we take your tax returns, plug it in, and do all these formulas and calculations, and it basically spits a number out at us for your monthly income. So the most important thing is for us to get the full tax returns. And either I would imagine most of the gig economy guys or women are doing, Schedule C probably, but there are some that do LLCs or have S corps or whatever they are. And so we need the personal tax returns and the business tax returns for the past 2 years, and ownership percentage, so K1s, that kind of thing. So as many documents as you can give us, the better we are at our job.
Okay. So in regard to business, are you looking at stability of the business? Are you taking that into account? Or, let's say someone shovels snow, so they make 150,000 over a 3-month period, and then they make nothing else for 9 months. Are those things taken into account?
We have had underwriters ask us or ask a CPA to write a letter on the stability of the business. I wouldn't say it happens every time, but we do get asked for things like that. Sometimes they call it a comfort letter, but in most situations, it's pretty black and white. If in the snowplow situation, if they make $150,000 during the winter, we're taking 150 divided by 12, and that's their monthly income.
Okay.
So it is a true black and white average.
Okay. All right. And let's say someone is selling, some kind of fad. I'm trying to think of some kind of fad thing right now, Pokemon cards or something that may fade out. Is that any of that taken into account, or is it, again, it's just strictly income over that 2-year period?
Yeah, it's income over the next 2 years. I don't think an underwriter or a lender should have the ability to decline someone because they think something might go away in the future, because they don't know.
Okay. Yeah. So it really comes down to, are you making the kind of income that you need over that 2-year period to qualify for the mortgage that you're applying for? So gig economy, we said 36% of those folks are U.S. workers are involved in the gig economy. Only 29% they estimate do that as their sole income. So what about people who have W-2 income and gig work income? How do you look at those folks?
So again, we're back to the 2-year thing. So it's the same for like part-time employment and those things. So we can use your W-2 income and your gig economy income if you've had them both for 2 years. So that 2 years really is the mark. Where let's say you're in the gig economy and you get a job full-time salary, we can use just your full-time W-2 salary income day one that you start. So if you're going from 1099 gig economy income to W-2, we can use the W-2 the day one that it starts.
Okay. All right.
Offer letter from employer, start date, income amount, hourly salary, whatever that may be.
Okay. So just a quick recap. If you have a gig job, if you have a gig work income, you can still get a mortgage. There are some challenges and hurdles that you'll face. If you reach out to someone like Brad at Kentucky and a Mortgage Group, they've got new products where they can help you try and circumvent that. So there are options there. As someone who's maybe leading up to that 2-year anniversary, what kind of guidance would you give them to help prepare to apply for that mortgage so they can buy a home?
I kind of already talked about that when we were talking about like reviewing income, finding out what type of monthly payment or purchase price you want on the mortgage, and then let's back into that income number that we need on taxes, and kind of go in that route.
Okay. I think go ahead.
Well, I was just say one more piece of advice, and something that we've run across recently is a lot of the gig economy, they'll use their personal bank account. If you are going to start this and really try to do something with it, go to your bank and open a business checking account. You can do it in just your name as a sole prop, but separate your business income and expenses from your personal. We've had a couple clients send us personal bank statements and they're like, well, I use that for my business. And then it gets murky of what is a true business expense? How much income are you really making? Like that kind of thing. So if you are going to do this, go get a business checking account separate from your household money.
Yeah. Good financial reasons for that. There's some legal reasons, record keeping reasons. Yeah. Separate it out. I heard you talk earlier about keeping good records. The better records that you can supply to your loan officer, the better. Down payment wise, what are these folks going to be looking at down payment wise?
So with 2 years full taxes, you're back to regular conventional guidelines. So FHA 3.5%, conventional depending on some other factors 3%. You can qualify for rural housing. If we go the bank statement route, that like kind of non-qualified mortgage route, it's at least 10% down. Okay,
so may need a little bit bigger down payment. And you talked about kind of the better record keeping or separating the finances. How about credit? Is it going to be good to help clean up credit in advance of this 2-year window if there's things floating around?
Yeah, and obviously underwriters are looking at the whole picture, right? So if, you started, business and had some late payments on stuff, business kind of struggled out of the gate, like that's okay. When we're going to the non-QM, it's a little stricter on credit. They really like to see 660, 680 and above. But if we've got full 2 years taxes and we're doing the conventional FHA or rural housing or whatever it may be, same credit score guidelines as somebody that's W-2'd or has an hourly job.
Okay. So we've got a gig worker. They, let's say 18 months in, year and a half into their new side hustle. Fair to say they could give you a call and you can kind of help set them up for success as they approach that 2-year mark.
Yeah, absolutely. And one thing that I would recommend is getting a CPA. We're experiencing a lot of these where they're doing their own taxes, and they could maybe even maximize income and save more money on taxes if they actually had a CPA. And it's a couple $100 or whatever CPAs are charging these days, as long as you don't have 15 different bank accounts and a bunch of different transactions. The cost of a CPA is probably well worth it if you're going to take this seriously.
Yeah, absolutely. I think that's the key. If you're going to take this seriously, CPA, and even I would assume, Brad, you, the client, and the CPA can work together on those tax strategies to say, hey, we're leading up to this house purchase. Here's the rules, the numbers that we need to get to, and you guys can work as a team to make that happen.
Yeah, absolutely. I've done it with people like you, real estate agents that are, looking to buy a house themselves, and have that conversation with them and the CPA.
Yeah.
Our whole team knows exactly how to do it, and would be happy to help.
Okay. All right. He's Brad C. of Kentuckiana Mortgage Group. Again, if you are a gig worker, you have a side hustle, connect with us. I'll put the email address at the bottom below. Be happy to connect you with Brad. And as a team, we can help you get the mortgage so you can get the keys to your new home. Brad, thanks for joining us today.
Thanks as always, Mike. I appreciate it.